We had a nice snapback rally on Wall Street today. S&P 500 up 1.4%, but the star of the show was the Nasdaq up 3.5%, good for its best day since back in, I believe it was November. We saw a lot of high-octane growth stocks like Tesla really ratcheting higher here today, and a lot of those other Cathie Wood types of stocks that had been beaten up here in recent weeks, but really surging back to life here today. So we'll take a look at all that, see what it means for our posture. Then I wanted to take a look at the energy sector in our trade application example today. It was not doing quite as well today as it had been, but there was one particular stock that kind of stood out to me, so I wanted to take advantage of that. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's March 9th, 2021. First of all, if you're new, welcome aboard. Remember to go over to our YouTube channel, click subscribe, and while you're there, go down below into our description area, sign up for our email distribution list. That way you can be notified whenever we post these recordings. And remember, in those emails, you'll also find the overbought and oversold cluster signals for the stocks in the S&P 500. We're also heavy users of Twitter. My handle is @BrandonVanZ. I would encourage you to follow me if you're not doing so already. And then last but not least, we do have a presence over on Facebook. Feel free to join our group at that web address you see in the logo in front of you. All right, let's go ahead and jump into our activity here today. And as I typically do, whenever we have a day of at least 1% up or down, I'll start with this kind of view here. This is the chart 6D for those of you that are following along at home as premium market scholars. This particular chart is going to give us an idea as to how volatile price action has been here recently, or in some cases maybe not very volatile at all. Well, today we did have one of these 1% up moves, and we've had a little bit more activity here recently. You can see some of these ranges expanding out a bit more. Now, like I said last week in the presentation, this was certainly not a market crash. Remember, last week was when I was sharing with you that one of the hashtags that was trending on Twitter was hashtag stock market crash, and I'm thinking to myself, I must have missed it because I didn't see any crash anywhere. But naturally, there are some stocks that have been beaten up a lot worse than others, and as I mentioned in the intro, those were the types of stocks that did bounce back today. So hopefully some folks got some better entry prices last week when they were falling sharply, and perhaps some that felt like they were a little bit overly exposed to the growth-oriented areas maybe got a chance to lighten up here today at slightly better pricing. But anyway, you can see this green bar here on the S&P 500 did get up and over this blue horizontal line, which tells us we had at least a 1% day. Wasn't quite as big of a day as we experienced here on March 5th, but again, keep in mind this is the S&P 500. The view will change if I were to change this to like the QQQ or the NASDAQ 100 ETF. You can see how dramatic of a day we experienced for the tech stocks. This is quite the candle here. You can see it does take us back to November as being the best performing one-day period that we had here. So November 4th, I guess, was the other time where it was up 4.46%. Today we were up nearly 4%. At one point today we were up 4.3%, but we did experience a little bit of selling pressure in the last 15 minutes of trading here today. Nonetheless, this was a really nice upward ascent there. Now, like David has been mentioning to you guys on Twitter and classes and whatnot, keep in mind that the biggest bounces tend to happen when stocks are below their falling moving averages. And so this could still be ending up some sort of a dead cat bounce. Only time will tell whether it's got legs or not. Obviously a very strong response today, and the stronger the better. But I don't think the picture is fully developed quite yet. So we need to keep our eye on the ball here. But obviously a wonderful day here for those of you that might be a little bit overly exposed to those growth-oriented areas. Let's go over here to the Market Watch tab as well. I wanted to show you a little bit of discrepancy, and this is quite a bit different than what we saw just yesterday. Yesterday was kind of one of those days where the old line companies really dominated and the technology stocks kind of suffered by the wayside. Today was kind of a role reversal of sorts. This is the S&P 500's visualization on the index watch here, and it was a pretty split day. We had 245 advancers to 259 decliners. So almost a 50-50 split in terms of how many stocks closed up and how many stocks closed down within the S&P 500. Now, if I were to switch this from the S&P 500 and go into the NASDAQ 100 instead, so hang on just a second while I find that. Where is it? Here it comes. NASDAQ 100. Take a look at the extreme difference here. We had 90 stocks up, 13 down. So I don't know if they need to extract 3 of those out of there. Sometimes these public watch lists are a little bit stale when there's mergers and acquisitions and whatnot, but at least gives us a good general idea here as to where the strength was in this market today. It's crystal clear by looking at the NASDAQ 100, which features a lot of those high octane growth stocks and technology-oriented areas. That was really the star of the show here today. So 90 up, 13 down versus basically a 50-50 split in the S&P 500. So to take a look at that a little bit closer, we could also come back on over here and kind of do our normal chart routine by looking at chart 4B. And here you will see, as you look at the different performances, and I know these numbers are somewhat hard to see, so I'll read them off as well, but the NASDAQ Composite was by far and away the best performer of these 4 here today. NASDAQ Composite was up 3.69%, so a very strong performance there across the entire composite. Remember, the NASDAQ 100 was up slightly more than that, but if you include all the other stocks on the NASDAQ, so it was quite a remarkable day there. The Russell 2000 came in second here today. It was up 1.91%. The S&P 500, as I mentioned before, was up 1.42%. And then the Dow Jones was a relative underperformer today. It was up 0.1%. So all of them were up, but the Dow Jones was effectively flat. And as I mentioned earlier, we had a little bit of selling pressure at the end of the day. You'll notice the long upper shadows here on the S&P 500 and the Dow Jones Industrial Average, and you've got a little bit of one here on the NASDAQ and the Russell 2000. So we did experience a little bit of selling pressure there in the last, let's call it 15 to 30 minutes of the trading session today. So not necessarily ending on a great note. Nonetheless, you don't want to take too much away from this market. It was a very impressive day, all things considered. So let's see where things stand now from a posture perspective using that market forecast technical indicator. And as we're looking at this, you can see we had a couple of new pieces of information to point out here today. In the case of the S&P 500 and in the case of the Russell 2000, we had new posture shifts back to bullish as a result of such a strong and aggressive up day. You can see in both of those cases yesterday with the S&P 500, that pink background color, and then also the same thing with the Russell 2000. So today's jut higher was enough to pull those green lines up a little bit. And I know that's really hard for you to see with the naked eye. It's even hard for me to see with the naked eye because that green line looks flat day over day to me down here. But that's the whole point of having these computerized charts the way that we do, because even if there's just a fractional move higher in the number that we can't spot with the naked eye, it's going to go ahead and plot the background color appropriately. So it's not the most emphatic of posture shifts that we've ever seen. Nonetheless, at least it kind of is showing us that we're making some progress in the markets. Remember, it was just 4 days ago things were looking pretty ugly here. I guess that would have been Thursday. And then Friday we had the nice solid rebound and we've continued back on up. So with the posture changes, remember, it doesn't necessarily guarantee that the securities are trading above their rising moving averages, but by coincidence, that also occurred here today. Notice that the green moving averages are suggesting that. The green moving average tips are telling us that price is above a rising 30-day moving average. And yesterday, the moving averages were yellow in the case of the Russell 2000 and red in the case of the S&P 500. So a couple of positive data points there on the S&P 500 and the Russell 2000. We shifted our postures back to bullish, and we also are now trading above rising moving averages. The NASDAQ, despite being today's star, still has work to do from an intermediate perspective. And I think that should make sense to most of you that are looking at these charts right here. Yes, it was a beautiful day to the upside, but as you can see, we still have this red moving average, which should suggest that price is below a falling 30-day moving average. We also have a dark pink background color of the chart telling us that the green intermediate line's posture remains strongly bearish. Now remember, if we do get another day or two of upside action out of the NASDAQ composite, I would expect us to go back to a weekly bullish posture. And the reason I say that is you can see how close we are to emerging out of that lower reversal zone on the intermediate line for the NASDAQ. You can see it's at 18 and rising. Remember, on this particular technical indicator, the market forecast, the lower reversal zone is at 20. So we're knocking on the door of breaking up and through there. All we need is just a little bit more of a push higher. Whether we get it or not remains to be seen. But judging by how the other indices are acting, you would like to think that the other indices are more powerful than the NASDAQ all by itself, and therefore these other indices might have a tendency to pull the NASDAQ up with it, even if it doesn't really want to fully participate. And if that does happen, we'll go back to a weekly bullish posture. It still won't be strongly bullish, and that does still make the NASDAQ different than the other three. Notice the background colors of the other three charts are that darker shade of green, telling us that we have strongly bullish postures there. So the NASDAQ is really kind of out of sorts right now compared to the other areas within this market. But hey, at least we got a nice win here today. Hats off to the NASDAQ with that nice 3.69% move right there. Very, very impressive. One other thing that I'll point out here, I don't want to make too much of it, but at least let you know that it does exist, is on the Dow Jones Industrial Average, we do have what's known as a bullish intermediate confirmation signal. Actually, you could say maybe we do. And the reason I say maybe is this is a very interesting situation that I don't think I recall happening before. I'm sure that it has, but I just don't have the memory to go back to a specific date in this case. But the momentum line ended exactly at 20. It didn't end at 20.01. It didn't end at 19.99. It ended exactly at 20. And remember, if the red line is in the lower reversal zone on the same day that the green line has a bullish posture, that would be constituted as a bullish intermediate confirmation signal. So I guess it depends on whether you count this as being in the lower reversal zone, on the lower reversal zone, or how you would classify that. But at least you know that the general mindset, I guess, is there, where we've had a little bit of a pullback from the intraday highs, but the trend remains intact. Remember, from an intermediate perspective, you might be able to say that the Dow actually has one of the stronger trends here. The reason I say that is you'll notice that we just hit a new high here today on the Dow. Yes, we did close flat on the session, but on an intraday basis, we hit an all-time high on the Dow here today. Whereas on these other charts, the highs were back here on February 16th for the S&P 500. Same thing goes for the NASDAQ Composite. And it looks like the high on the Russell 2000 was on February 10th. And so the Dow has been the one that has kind of consistently plodded along. Remember, this market's temperature has kind of changed, where it hasn't necessarily rewarded high growth as much as it did in 2020. This is a market that is rewarding value. In fact, we'll have that conversation tomorrow morning in my factor-based swing trading class. And quick housekeeping note there in that regard. I've been mentioning this in my other classes over the past week as well, but remember, tomorrow is the day where I need to push the time of my class back 1 hour, so it'll be at noon Eastern time tomorrow instead of 11 a.m. Eastern time tomorrow. That's just for 1 week only, as I have a quick little personal schedule that I need to take care of and get my kid to school first thing in the morning. So anyway, be aware of that. We've already had that established on the calendar, but just want to make sure that you're thinking about your Wednesday mornings the right way. And then I think David is off for his class tomorrow. I think he's got a road trip or something planned. So anyway, be aware of that, and if you have any questions on that, let us know on email and we can get you all squared away there. All right, let's go ahead and take a look here at our next chart. Let's do our 3 green arrows chart now. This will be chart 4D. And as we're looking at this, you can see that we have one chart that does have a 3 green arrow signal, and that is the Dow Jones Industrial Average. No surprise, again, it was the one that hit an all-time high today, so naturally it's going to be the one that stands the best chance of having 3 green arrows. We got our 3rd green arrow today, as a matter of fact, on the Dow when the MACD histogram rose above the 0 line. And so it's telling us that we've got a little bit of a swing of momentum that's pushing into the Dow Jones Industrial Average at this moment in time. The other indices do not have 3 green arrows. We do have one that has 3 red arrows, and that naturally is the NASDAQ Composite. Remember, that's the one that has the price action furthest away from its falling 30-day moving average at this moment in time. So it is the one that has struggled the most, and you can see ever since topping out here last month, we've kind of put in this series of lower highs and lower lows. Whether that ends up kind of getting fulfilled with further price action to the downside remains to be seen. But right now we can, effectively say that on an intermediate perspective, it's the NASDAQ that is the laggard compared to these other areas. So when we look at the S&P 500 and the Russell 2000, we have a mix of green and red arrows there. What we're waiting for on both of them is for the MACD histogram to go back to a green arrow. Right now, we're nearing that possibility, but it might take another day or two in order to achieve that. So we'll keep our eye on it, and when that changes, we'll let you know. All right, let's go ahead and do a little bit of 12 grid analysis now. And I'm going to start with chart 5A here in this case. This will be our asset class 12 grid. Remember, the background colors of these 12 grids will tell us what the current intermediate posture is according to the market forecast technical indicator. And so we've got a mix of green and red backgrounds here. The pink ones are going to be your bearish postures, and your green backgrounds are going to be your bullish postures. So let's kind of go through some of this information here and see what we can discover here together. So one thing that did catch my eye here today was the falling U.S. dollar. You'll know that UUP is one way for us to track that in kind of an easy approach. It could also go into the individual currencies themselves and the currency pairs. But in this case, it gives us a sense of how is the U.S. dollar doing against a basket of other securities. And the U.S. dollar had been one of the strong points here in the last week or so. It was kind of following the treasury yields higher and interest rates higher. Today, we saw a fall in both of them. We saw the U.S. dollar fall by over 0.5%, and then we saw a little bit of a give back there in the 10-year treasury yield as well. We ended at 1.54% on the 10-year treasury yield. Well, that led to an opportunity for gold to finally get a little bit of a rally. It was actually a rather impressive day for gold. It was up over 2% here today. Now remember, we've been looking at this for the last several weeks, wondering when and if there will be a bounce, expecting that there would be, but the question would be then how aggressive would it be and where would it take us? So we finally got a little bit of a bounce here today, and that was off of 2 straight oversold cluster signals here. This was a pretty solid size bounce for gold, but it is not trend changing in nature, at least at this point. But naturally, that's why we do these videos every day, so we can keep our eye on that sort of thing. And, charts do change eventually. Stocks that were hot become cold. Stocks that were cold become hot. But it just takes a little bit of patience and a little bit of time to figure all of that out. So at this moment in time, you sit back and you say, okay, well, that was a nice 2% move out of gold, but what did it really do to change our opinion of it? And that's not a whole lot. In other words, despite the rally, we continue to have a strongly bearish posture on gold, according to the background of the chart there, and we still have price below a falling moving average, which is why that 30-day moving average is plotted in a red color there. So this was a little bit of a reversion to the mean off of an oversold area, but until we start breaking above that moving average, I think it pays to be cautious around your gold investments at this moment in time. But if we do have the dollar continuing to fall down towards its moving average in the coming day or weeks, we might very well see gold go up to its falling moving average during that exact same time period. And at that point, if it looks like it's going to fail at those levels, I think putting on a bearish trade on gold could make some sense at that moment. Oil has kind of been the opposite. Oil actually fell here today and remains in a very strong trend. So despite the nearly 1% give back on the oil chart today, this is a chart that I think deserves attention from trend traders. This is an area that we, of course, have been focusing on a lot in my trend trading class on Mondays. In fact, energy as a sector was our kind of featured area that we focused on in my dividend growth investing class earlier today as well. For those of you that want to listen to that head-to-head matchup, if you're one of our premium members, that recording is posted, so you can check that out. We actually had a rare opportunity to review a master limited partnership here today, and we don't get that opportunity all that much. So if you wanted to hear my analysis on that, feel free to check out the recording. But anyway, oil remains in a very significant uptrend right now. Whether that lasts for the next decade is anybody's guess. But right now, at this exact moment in time, in the here and the now, the present, oil is a very strong place to be parking your cash. Other areas of interest here, you can see up at the top that EEM had a very nice day. That tracks your emerging markets foreign stocks. That index, or that ETF in this case, was up 2.2%. So a fairly strong day there in comparison to the general benchmark of the S&P 500, which, as I mentioned before, was up 1.4%. EFA was up just under 1.4%, so you could call EFA and SPY very similar to one another. So this was more of a risk-on type of a day, where we saw kind of the more high-octane emerging market stocks doing a little bit better on a day when we saw all those high-octane growth stocks in general doing better. You can see that Bitcoin was up 1.5%, so a pretty quiet day for Bitcoin there, but it, of course, remains in this nice upward trajectory there. Let's go ahead and take a look at some sector analysis now with chart 5C. And as we pull this up here, you can see there's one and only one pink chart on the board, and that is in the upper right. And lo and behold, that is technology, the one that was doing quite well today, second only to consumer discretionary. Consumer discretionary was up 3.78% today. Technology was up 3.4% here today. Now, the consumer discretionary move can be credited largely to what I mentioned earlier about Tesla. Tesla had a heck of a day. TSLA, of course, the ticker symbol there. You don't see this very often. Remember, Tesla is over a $500 billion company these days. In other words, one of the 10 largest companies in the United States. And it was up 20% today, effectively, just for no real great reason. I'm sure there was some news story out there, but the point that I'm trying to make is you don't see those types of moves out of $500 billion companies all that much, right? That's the type of thing you expect to see out of a penny stock. So the trading activity in Tesla has been crazy, and that has led to some impact on XLY itself. As I mentioned last week in the video, that XLY is controlled largely by three main names, which are Tesla, Amazon, and Home Depot. And so we did see a real big breakdown on this chart for consumer discretionary because of some of that negative impact that Tesla had last week. Well, that reversed course and has really kind of benefited XLY on a relative basis here today when Tesla goes up, 20% the way that it did. So anyway, that might be a little bit of an anomaly there. Obviously, we're still below a falling 30-day moving average on XLY, and the same can be said for technology. Notice the red moving average there combined with the dark pink background color telling us that the intermediate posture is strongly bearish. Right now, technology's intermediate line is actually in the lower reversal zone below 20. So it's kind of interesting because remember, for years and years and years, technology was one of the leading areas within the market. So now it's kind of on the outside looking in. Again, good day for it today, so we'll see where it takes us, but it's got work to do. We've got some broken support levels here that we now need to kind of contend with. You'll notice that we did have energy as our worst performer here today. Energy was down 1.75%. Now keep in mind that it was just yesterday that it hit a new multi-month high. So a little bit of profit taking there. I wouldn't read too much into it. Obviously, we still have an extremely strong uptrend on our hands here for energy. Remember, one way that you can kind of determine strength by looking at this 12 grid view is just looking at what is the number that's listed in the label. The intermediate line on energy is at 93 right now, and that is the highest out of all of these that we see on the board here in front of us. Industrials fares pretty well at 85, and financials fares pretty well at 89. Communications up there at 82. So those are other areas that are quite strong right now, but energy is the area that has the most strength. And I spent a bit of time yesterday in my top-down trend trading class kind of describing that and using a few different charts than we normally do in order to drive home that point. So if you're interested in that concept and that conversation, feel free to check out that class from yesterday's recording. All right, let's go ahead and pop on over here to the internet and check in on a few things over there. Wanted to say thank you to those of you that help support the Market Outlook video product that we put together for you here. 110 of you clicked like for me the last time around. I really appreciate that. Anytime we're up and over 100 likes, I know that this is time well spent for us. So keep up the great work there. It only takes 5 seconds of your time to help support us here. Also, while we're over here on the internet, I'd like to point out that the sector selector was put together over the weekend, as it always is, and energy retained that top spot for the second week there, up there at number 1. Communications was number 2, financials is number 3, discretionary number 4, materials number 5. All of those were exactly the same rankings as the prior week. Where we did have a little bit of turnaround here was with industrials and technology. There's been enough wear and tear on technology where it has slipped to its lowest ranking in the last 3 months, number 7 slot now for technology. So that's we'll see if that changes this week, right? Today was an impressive day for some of those tech stocks, so maybe they'll get back to number 6 on the next rankings. But what we know right now is that tech just isn't quite what it once was. Tech was a leader for a big chunk of 2020, and so far in 2021, this has been a story of oil stocks and banks and media companies and things like that, kind of older line companies there. Also wanted to kind of talk about our trade application example now with this energy concept in the back of our minds, knowing that it is ranked number 1 on the sector selector. Also wanted to point out here over on Twitter, this would have been, I think, on Friday when I made this tweet, but I mentioned that the number 1 ranked industry according to the WAR score, which is what we use on our stock selector and sector selector. WAR, by the way, is just an acronym, stands for weighted aggregate returns. It's a way for us to score a lot of different securities based upon 5 inputs from 5 different time periods, where we're weighting the more recent time periods more heavily than the further back time periods. But anyway, the number 1 ranked industry out of all industries under our coverage here as of Friday was energy, equipment, and services. And I said, I know sometimes people want to fight this, but the charts don't lie. And I kind of shared that here. So, that was an impressive move there in the last few months for energy, equipment, and services. So every so often I'll kind of give you some hints as to what I might be looking at for my classes and presentations like this one here, because tonight's trade application example will come from the energy, equipment, and services industry group. I also wanted to point out that, hang on just a second, got this pulled up in another window here. On our stock selector tool, remember this is available to those of you that are premium members of Market Scholars. And this is that ranking system that I had mentioned before, where we rank 1,000 different stocks, and then we're also ranking the sectors and the industries and things like that as well. And so the stock that we're going to be focusing on in tonight's trade application example is going to be Core Labs. And you can see this week Core Labs was ranked 144th out of all 1,000 stocks that we track on the stock selector. So that's where it kind of caught my eye there. You'll notice that it's listed here in a green row across the board, which suggests that not only is Core Labs part of the top 1/3 of all stocks that we cover, but it's sector of energy is also in the top third. In fact, it's number one, as I mentioned before, and energy equipment and services is also number one. And so with all three of those things kind of lining up for the bulls, you can see that it is listed there in kind of green coloring across the whole row, just so it's an easy visual for you to know that these would be the stocks that we would be looking at in my top-down trend trading class, where we have a rule where we're looking for stocks that are in the top third of all their rankings, sectors that are in the top third of all their rankings, and industries that are in the top third of all their rankings. So all those companies that would fit that profile would be listed there in that green row. Now, another thing I wanted to point out is if you come down below here to this stock rank history, there's a new feature that I added this past week that was not there before. Brought this up in class yesterday, but sometimes I know you guys aren't able to always get into those classes, so I figure I'll mention it here as well while I've got your attention. But when you look at the stock rank history and you see the orange labels here where we have the ticker symbols, that represents those companies that kind of meet the top-down trend trading rules for that week. In other words, these green rows right here are the ones that would qualify. So if we come back over here to the rank, you can see that, for example, that's Discover Financial in that case, and then Fox, and then there's Core Labs right there, CLB. All three of those, so there's Discover, there's Fox, and there's Core Labs, they fit that role because they are all in the top thirds of their respective areas. So anyway, it's a way for you to not have to bounce back and forth quite as much on these different tabs at the bottom when you're looking for that information. And you can see right here that Core Labs has kind of been in the green zone for the last few months at this point and is considered an acceptable stock for top-down trend trading purposes right now. We know that because it's listed there in orange. Another thing that caught my eye with Core Labs is now that I transitioned back over to the Thinkorswim platform, I wanted to show you that when I was kind of paying attention to the energy equipment industry, I wanted to look at all of the various components of that. And some of the ones that we track the most closely are listed up here. And I just wanted to point out that Core Labs was the only one out of this group to finish higher today. Now, it was only up 1%, so it's not a big deal. But, you know, some of its compadres there were down 3, 4, 5%, right? You've got Boom, that was down 5.8% as an example, and Halliburton, that was down 3.6%. So while this is the number one industry right now, today was a bad day for this industry as the stock market kind of fell back in love with tech stocks for a day and kind of pushed the oil stocks aside. So this might be an interesting kind of poker tell of sorts, where on a day when the energy services group as a whole struggled, there was one standout performer in that group, and that was indeed ticker symbol CLB, Core Labs. So let's take a look at the chart now of that company, and I'll explain what the trade application was that I did on it. So let's just pull up chart 4A, just a normal market forecast one grid here. And I'll type in ticker symbol CLB. And as that pulls up here, you'll notice that we actually hit a new high here today as well. We can see that with this green label above this chart that says yearly high today. So again, an impressive day considering the circumstances. Oil stocks in general were down fairly significantly today. This stock was hitting a new multi-month and in fact a full yearly high with today's move. And you can see that this is the third straight up day for CLB, up and off of that rising moving average, combined with this background color here in the dark green tells us that we do have a strongly bullish posture according to the market forecast technical indicator right now as well. I also wanted to point out, so this is a 3-month view that we're looking at here, but let me also pull up a 6-month view. That's what it looks like in 6 months. And then let me also show you a 1-year chart here. And what I wanted to point out is that I ended up doing just a simple bullish swing trade on this. I had intended to buy calls on it, to be honest with you, but the options are pretty illiquid on this one, and I put in some orders to try to get filled. I just wasn't able to get them filled, and so I kind of had to relent towards the end of the day and just place a trade on the stock itself. But basically, what I ended up doing is buying this with a $9 per share downside stop loss and a $9 per share upside price target. So basically hoping that this breakout here today to a new high leads to further upside activity. If it doesn't, then you can see that I have kind of this double top formation that was in place. The first location was back here on June 8th when its high was 29.59, and then we had another high right here on December 10th of last year where its high was 29.85. So you can see my stop loss is just a hair below the highs of those candles. In other words, if this trade breaks down, it's going to also have to kind of start cutting into that prior double top area before I'm stopped out. At that point, if it does it, then I have to kind of accept the facts that this trade is just not working for me. On the other hand, if it continues to bounce up and off of this moving average like it looks like it wants to do, then hopefully that positive momentum will carry us up here towards that price target that's up there just a hair above 47. If you need the exact details on that, remember I always do these trades before the market closes, and so those of you that are premium members can check your Telegram app for the trade specifics there. So that's what I had for you here tonight. A bullish trade on an oil stock in the strongest industry out there, energy services and equipment industry, and try to take you behind the scenes of my mindset, both my posts there on Twitter, and then showing you some of the tools that I use with the stock selector tool, and then some of the ranking system that I'm using on the Thinkorswim platform to kind of put all that together with one trade idea here with CLB tonight. So I hope you got some value out of that process, some helpful information there for some of you. Otherwise, I hope you at least got some value out of the general market analysis. If you did, there's one thing I ask of you. Just simply take 5 seconds out of your day and click like for me there on Twitter. Remember, there's 4 different ways you can go about doing that. You can go to the Twitter itself, and it'll be pinned to the top of my timeline. Otherwise, you can click like. For those of you that are watching the video on our website, the Twitter widget will be directly below it. If you're watching it directly on YouTube, you can find the Twitter link in the description area. And then for those of you that receive these emails from us, remember there's also the Twitter link that is embedded within those emails as well. So whatever one of those 4 approaches you take, I'd certainly appreciate that. It helps us know that our time is well spent and that we should continue to do these videos. So until next time, I want to wish you all the best of success with your trades and your investments. Goodbye for now.